Hi everyone, I'm Ken from Crypto Trading KS. Let's run the numbers. Bitcoin currently 62,425, up 0.22%. Ethereum 3820, down 1.31%. My goal is to assist you to be more of a financial blessing to yourself and those you love, and also gain real wealth in the process. In this episode, we're going to talk about real wealth. What is your crypto strategy? You can make many decisions in life based on what happens. It's really important to make those decisions ahead of time. This is all about Rule 774, master yourself to master the market. As a community, we're all about real wealth. Real wealth is much more than money. Real wealth includes inner and outer peace, fulfillment and meaning, purpose and fearlessness, integrity, decency, empathy and love. Many people feel that they have to get money first and then they can enjoy real wealth second. In fact, the opposite is true. You can accumulate real wealth no matter what your financial situation. Life is the sum of all your choices. When we talk about making a strategy is simply a well thought out, probabilistic route to making optimal choices. When it comes to choices, people who are in Zone 1 and Zone 2 require certainty. The markets never provide certainty. Therefore, they are in reaction mode, not in choice mode. Zones 3 and Zone 4 are all about probabilities and making choices, not making reactions. This is a very important distinction between Zone 1 and 2, which is a reaction-based zones, and Zone 3 and 4, which are really choice-based zones. The framework of KS zone analysis was introduced to explain the 4 stages that every single investor and trader progresses through to become consistently profitable and attain real wealth. Zone 1 is the panic zone. That's all about internal conflict, suffering from fear, uncertainty and doubt, and fear of missing out, FOMO and FUD. Zone 2 is the blame zone. It's all about external panic, conflict with others, attacking others. If you see anybody attacking someone else, they're generally in Zone 2. Zone 3 is the patience and rule zone, where probabilistic fearlessness, knowledge and forgiveness, accountability and learning rule. Zone 4 is the meaning zone. This is really all about inner and outer peace, authenticity, integrity and honor, gratitude and worthiness. This is all about having a good life. It is possible for people to inhabit 2 zones at the one time, and that's just part of life. We're not dichotomous creatures. We're not 0 and 1. We're fuzzy logic. We're all of the graduated scales in between. Zones 1 and 2 are all about reactivity. Unfortunately, reactivity is born in fear. Any fear-based choice, which is just reactivity, heads you off in a path, which is not a good path. In Zones 1 and 2, we define this as the light switch concept. People tend to be all in or all out because they just want 100% certainty. They want to be 100% correct 100% of the time with 0 loss. And of course, who wouldn't want that? The problem is that life is not that way, especially in the crypto market. Zone 3 and Zone 4 are all about having a strategy, having a probabilistic choice. This is about Zone 1 and 2 is about reaction. Zones 3 and 4 are all about choice. Thoughtful choices are not reactive. Having a thoughtful choice means that you've assessed the different outcomes and you've looked and you've done your analysis. You basically run the numbers and you've said, okay, I have these 3 choices to make. I'm going to choose this one, and you have a really good reason for doing that. I would suggest that before you get into any trade, any investment, you make in advance probabilistic choices. You decide what is going to happen. For example, if we get exponential price movement in your particular crypto, are you going to hold? Are you going to add to it, or are you going to drop it? What is going to happen? Are you going to scale out? All of these are really, really important things. In zone 1 and zone 2, people don't make in advance probabilistic choices. They just hope. Hope is not a strategy. Zig Ziglar said it really well. Expect the best, prepare for the worst, and capitalize on what comes. This is a quotation about zone 3 and zone 4 behavior. Expecting the best and preparing for the worst is really critical in strategy. Capitalizing on what comes is also very, very important. Rule 139, choose ahead. Are you going to stay, to bail, or to add? This is a really, really important rule. For example, if we look at Bitcoin over the past 10 years, we can see very big returns, but they weren't always big. There's an enormous amount of volatility inside these returns. When Bitcoin decreased, were you going to sell or were you going to hold? These are critical decisions that need to be made ahead of time. If we consider the long view model, and we've been discussing this model since Bitcoin was 30,000. At 30,000, I said we're just getting going. It's not going to collapse. That made many of our community members quite wealthy. The key is we are still in phase 1, the bull market psychological sunshine phase. We're literally just getting going. A lot of people think that this is the top. I don't believe so at all, and I never have. One of the things that you always want to do, if it is possible, and it depends on your risk aversion and many different things, have some money in the 10-5-10 fund to buy drawdowns. But if you don't have any money there, that is okay too. You can be fully invested. So let's just focus on this past green candle here in phase 1 of the last bull market. On its road up in the 2016 bull run, we saw massive volatility, increases in price 87%, decreases 20%, increases 38%, decreases 40%, increases 38%, decreases 15%. You get the idea. It's all up and down. Crypto is incredibly volatile. It is not a straight line to the top. Many people think that crypto will just get away from them. You can see back here in this particular run, price came up substantially and then retraced back to this level. That's what the 10-5-10 fund is for, to buy on the way up. We are on the way up indeed, but you always have to have a strategy. What if you get a 40% decline tomorrow? What are you going to do? These are really, really critical questions to ask in advance. When we look at the combined market capitalizations of Bitcoin and Ethereum, we see we've overcome this key resistance, come back and retested and resumed off very strongly. We're having a couple of potential Bitcoin ETFs approved and in trading by the end of the week. The ProShares Bitcoin, which should come out later on today, and the Valkyries Bitcoin futures-based ETF, both are futures-based, coming out hopefully towards the end of this week. Now, futures can cause a lot of market turbulence. They're not like a spot. They're actually a derivatives-based investment vehicle. This could create some issues when, just think back to the quadruple witching and triple witching and all of those kind of events. A lot of volatility goes up when futures contracts expire. Now we're getting more and more and more of those futures contracts into the market. I would foresee that we'll have even greater volatility going forward. This you should be aware of. The other thing to note is the Evergrande default. It is more than likely that Evergrande will default in around 6 days. So the question is, what are you going to do about it? If it defaults, what does it mean for crypto? You may see a sell-off. In just as equally likely, you could see an increase in Bitcoin and crypto. We do not know how this will affect the markets. We can say, based on probabilities, if it hits the main market and the main market has an increase in fear which drives the indices down, people will be cashing out, and they could do so with Bitcoin. But Bitcoin may become decorrelated with the stock market. It's small enough to do so, but does it do so? What we can see here, this white line, is the directional movement of the Nasdaq. Of course, the Nasdaq has been doing different things, but you can see how much of an association has been playing out here. This is all part of your situational awareness. You need to know what's going on, not to panic, just to make informed decisions ahead of time. For example, in 6 days, if everything is fine, what do you do? How will you approach things? In 6 days, if the market sells off hard, what are you going to do? In 6 days, if the market just goes exponential, what are you going to do? There's always those 3 kind of phases that you have to make a decision on. You can't just hold on and hope and say, oh, everything's going to be fine, all the news is bullish, everything's wonderful, sunshine. Well, unfortunately, light and dark always play into life. The critical thing is to be aware. You can, like so many people, not choose to look at these things because they're scary. You can say, well, I'm a long-term investor. All I care about is an investment return over years and years and years and years, and that is totally fair. These returns happen after 80% drawdowns. Just think about that. Incredible stuff. But maybe you can't hold for the next 10 years. Maybe you need that money to pay rent or your mortgage or kids' school fees or something like that. What are you going to do? It's a really important topic that just about every other crypto channel is not discussing. Maybe it's not popular, but we're not about what is popular or not. We're about, on this channel, inside our community, we're about safeguarding wealth. The important thing to do is you do not panic. Every time you walk through your house or apartment or wherever you live and you see a light switch, just think, all in, all out. Please don't do that. Just think of everything as scaling in and scaling out. Probabilities, not everything has to be 100%. That is a probability, but it's only 100% certain. Life is absolutely uncertain, so you need a strategy for the good, for the bad. So what are we looking at realistically? If we look at Bitcoin's technical analysis, Bitcoin is currently trading at 62,456, moving around a lot. We can see a very good upward support line here. We can see strong support below as well. There's a key level, if you like, a pivot at 63,511. When Bitcoin starts to get above here, it's looking fantastic. But note, there's also a good amount of support at that 59,394 mark, as well as the 52,658 mark, and a bucket of support around the psychological 50,000. Now, what would happen if Bitcoin dropped to the 50,000 mark? What would you do? Could you do anything? These are always questions that you should ask yourself as either a trader or an investor. What about if it shot up to 75,000? What would you do then? How would you FOMO in? Would you wait for a pullback? How would you approach it? These things are really important to understand. Your reactions you need to control to be professional. Let's have a look at Ethereum. Ethereum currently trading at 38.27. We can see Ethereum is seeking to make its way above this level of resistance. It's attempting to take out this 39.35 mark. When it starts to get above 4,000, I think it's looking really good. There's quite a degree of support underneath that price level. But let's say that it doesn't. Let's say that it goes the other way. You always need your strategy ahead of time. What would you do, for example, if the price over the next week decided to come down to 36.49 or 35.90 or 33.19? What would you do? If the price rallied from 4,000 to 4,500 to 5,000, what would you do? This is what it's like to be a professional investor. A lot of people say, I want to earn 5x, 10x, 20x, 100x on my investment. To do that, you need to think in this way. There are no shortcuts. You could also look at it like when you are a professional investor in the financial markets, you could easily make more than a surgeon, a professor, anything you like, a senior management consultant, whatever it is. Those people spend their entire lives gaining skills. For example, a partner at a law firm just doesn't walk in off the street and say, I can practice law. They have to study and study hard and be very dedicated. It's like this in the financial markets. Unfortunately, many people think it's just a roulette wheel. If it's that, the house will always win. I've been involved in financial markets for more than 35 years. As a result, I give you a much more balanced perspective. I'm not here to sell you on hype. I don't sell anything. I don't have any courses, anything like that. What I'm here to do is just to share my experience with you. An experience that has seen significant losses, and all of the rules that I share with you are based on me taking mind-numbing losses. And that's what I found was the way for me to get away from that. It's really important to note it can take a while to get your feet on the ground, but crypto is the best industry in the world. It's just going to get stronger and stronger and stronger. Personally, even if the market crashed, I would see that as an ultimate buying experience. Crypto is here to stay. I know many people would be saying, Ken, why aren't you so positive and optimistic? You know, every single channel that I look at, every channel on YouTube, the press, the media, they're all saying, oh, sell your house, sell your car, buy Bitcoin, go all in and more. Yeah, dumb. This is the reason. What we're seeing is really, when you look at the percentage of Bitcoin holders in profit, it's currently 99%. Now, what do we know about that? When we get very elevated profit, the shorts come in to cool the market. This is just normal stuff. Of course, it can bump around the 99% mark for a while. Absolutely it can. But the probabilities get less and less the longer it is up there. And if it's come up the wall like this, generally it's a case where it will come down and retrace. We're also coming into a previous all-time high. What does that mean? All-time highs typically retrace. We see it all the time in the stock markets and other financial markets. Something to be aware of. When we look at total open interest, futures open interest across all exchanges, we note that it's around 22.12 billion at the moment. Let's check the latest price. We can see it's substantially more at 23.3 billion. Now, why is that a problem? It's a problem because when futures open interest gets too high, too many people are in profit, the shorts will come in and say, wow, fantastic, I'll have some of that profit, please. There is literally a symbiotic relationship between longs and shorts. People say, oh, those shorts, that's so wrong, they shouldn't take the money. But actually, for you to be in profit, somebody else had to be in loss. This is just the way of the financial markets. What we can see here is the futures open interest on Binance is the highest it's ever been. It's higher than this peak here. That peak there, we saw it just climb up a wall before a retracement. Now, I'm not saying there's going to be a crash. I'm not saying anything like that. I'm saying that you need to be aware of what is happening under the hood of the crypto engine. Is the engine about to get overheated? Yep, it looks a bit overheated to me. Does that mean it's not going to go up tomorrow? No, absolutely not. It could continue to go up and up and up. That is a strategy. Could it retrace? Could it come down? Yes, absolutely. And why is that? Because there's so much excess open interest. The 99% of people are in profit. The shorts would be very attracted to that, to actually make money from that. That's the symbiotic relationship. Now, of course, we have the all-time high approaching as well. There's a lot of things, and the futures ETFs also. Now, does that mean the market will crash? No, it doesn't. And this is the hard thing about trading and investing. If you're looking for certainty, that's zone 1 and zone 2. You do not want to be there. Zone 3 is that you trade the graph, the chart in front of you. The chart in front of us looks really, really good. However, we're also aware of potential downside risks, such as the ProShare Bitcoin Strategy ETF. It's on futures and not spot. It's adding to the open interest and overheating the market. Also, we know in around 5 days that Evergrande will in all likelihood default on its debt. What we're doing here is just being aware. You don't need to panic. You don't need to run for the door and exit all positions. That's not what this is about. Unfortunately, in past videos, people felt that way. That's why I had to get the light switch analogy, and that's why I stopped doing the early warning system. Professional traders really look for this kind of information, but when people are just starting, I'm saying be aware of the risks, have an upside and a downside risk strategies in play. It's really important. This may sound a little bit harsh to come out with an episode like this when there's so much sunshine and happiness around, butterflies and rainbows. Unfortunately, if someone 30 years ago had said this to me, I would have paid attention. Making in advance probabilistic choices. What's the choice? To add, to hold, or to dump. Those things are really, really important. They're part of your professional journey. You're in the absolute best market in the world. These percentages will increase over time. People are just starting to catch on to crypto and it's hitting mainstream adoption. But please be aware of the volatility, and being aware can really work to your advantage. Also understand, it's not like a light switch, it's like a timer. You just go in and go out, and you have clearly defined rules, and you base those rules on probabilities, percent chances. But you're really, really clear on what direction you will take. You can sleep well at night because you know what you're going to do. You've already decided, and you are a person of your word. You keep your word. I'm just doing my best to prepare you for what is to come. If you were to see a 40% drawdown, how would you feel? How would you cope? How would you react? If you were to see a 90% uptick and then a drawdown of 20%, an uptick of 40%, then a 40% drawdown, how would you react? Typically in crypto, you realistically don't miss out, but it takes a bit of patience to understand this. This is a really important thing to learn, all about strategy. It will accelerate you decades ahead of other people. How I feel about you: you're a worthy and unique human being. You deserve kindness, love, meaning, and every success in life. Everything that I do, I'm trying to prepare you for the realities of what is out there. It's literally a zero-sum game. When there's profit on the table, the shorts will eventually come in. It's 100% probable. It's just the way the markets work. For this reason, please remember Rule 170. Crypto is volatile. We say it every day. It's so important to understand. I think if there is any correction in the market, potentially 98% of people will be caught off guard. They just won't see it coming. Professional traders and investors always keep their ear to the ground. They want to know what's on the horizon, if it's storm clouds or it's sunny, and they have made their decisions ahead of time. I hope this episode has helped. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you to our moderators for keeping our community safe from scammers. Please say hi and let me know where you're viewing from and if you have any questions. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.